What's going on, friends? This is Sumner Healy, and it is Friday, August 25th, I believe. And I'm just rounding up a little trade recap from today's crude oil trade. I only took one trade today, so this will be a very brief recap. I want to give you guys a rundown of my entry, my exit, what got me into the trade, what got me out of the trade, and hopefully you guys will learn a little tidbit in that process. Um, so we'll pin down to today's market action. This is crude oil on the 15-minute time frame. Market opens at 6:30 over here on the West Coast. So this is market open, and market closes at 11:30 for crude oil, which is that candle right there. So very quick gist of what we were seeing today. We bounced off of yesterday's smash down that we had. We took that long trade, cut it a little short, and ended up running higher from our entry. And then we're doing this nice consolidation pattern. And this is really what I like to call no man's land for the most part. Usually I don't like to try to take trades in those consolidation zones because it's just, I don't know, it seems more like a guess than an actual educated trade in my opinion. So usually I stay out of these zones, but there are occasions where I'll have a timing kind of context piece come up, and that's what we saw today. So today's trade was really context based, and what we saw here was pretty big rip this morning around 7 a.m. and immediately retraced it. We'll actually drop down to the 5-minute. Very volatile. Rip, retrace, rip again, and then retrace again, and then it started pulling once more. So what I was looking at was around 8:30. We were attempting to reclaim these highs and just got completely shut down at 47.75. We had looks at about 3 to 4 attempts in this little zone. So within about 10 to 15 minutes, we had attempted to break that 47.75 4 times, and every time had failed, but it hadn't failed and given us a breakdown yet. So we were just fail, try again, fail, try again, fail, try again. So the trade that I was looking at was if it's going to break down now, which I had a slight bias to the downside, or if it's going to break down in general, it's going to do it now. I mean, after the 4th attempt, it's incredibly unlikely that's going to continue attempting. So at a certain point, you build up so much pressure, for lack of a better word, that pressure has to go somewhere. And so that energy usually goes to the downside or to the upside. In those rare cases, you will just continue to consolidate, and eventually you will make a move. But after the 4th attempt, I was looking for a move to the downside with a very tight risk at 42.75. So I ended up entering on this candle, I believe it was, let me check my orders. I believe I entered, 8:45 at 47.72. So that brings me to this candle right here. This was the final and last attempt. I entered at 47.72, risked the high of this candle, so 47.75. I was risking 3 cents or $30 per contract. Ended up getting a really nice move out of this, actually all the way down to 47.52. So I got about exactly 20 cents out of this trade. So risk to reward was on point for this trade. I ended up taking this at 47.61, and I'll tell you guys why. So my original target was a test of these lows down here at 47.45. When we broke essentially this little wedge pattern, and I don't trade off of these, but I like to have these just as a general reminder of what's happening. When we broke out of that and then pretty much instantly wicked up and then started holding those gains, that was my cue to leave, and so I used my own discretion and got out. The trade could have very well gone lower. I just didn't like the fact that we're coming to the end of the day. It's a Friday, and we're building a really funky pattern. So I ended up making the right choice, getting out at 47.61, which gave me a $110 profit per contract. So that was a nice move. I could have very easily just done the complete opposite and crashed down, but it ended up ripping up. So that was a really, really good trade. From a risk to reward standpoint, pretty damn awesome. You can't complain with risking 3 cents to potentially make upward of 20 cents. I ended up closing it for 11 cents, which is still a very nice risk to reward when you're risking 3 cents. So that's the only trade I took today. I've done about I think 3 or 4 day trades this week. So very conservative. 4 for 4 for my day trades. And you guys, my NASDAQ short, which is the only long-term trade that I currently have on. I'm still in this. If you guys remember, my original entry was up here. My second ad was right there. So my average is about, I think, in the 58.80s. And I'm up a sizable amount for being in 2 contracts, but I still haven't taken any off the table. I'm looking for a test of these lows once more. If we don't break out of that, if we can't actually push through the 57.50 area, then I'm going to look to actually cover up this trade and let it build another pattern and maybe end up getting back into it, or this could be the only short that I take for a while. But this has been a really, really difficult trade this week to hold through because you've gotten a lot of up and down movement. We'll zoom in down to the 1 hour chart. This has been doing just a lot of grinding. It's actually been an incredibly frustrating trade because you'll get this solid flush candle and you think that's going to be the initiation for a sell-off, and then the next day you'll just end up grinding up. And so we've seen that here, and we saw that here. So if we repeat this pattern once more, which I actually don't think we're going to, I think we're going to see a test and perhaps even a flush of the 57.50s next week. But if not, then I will be out of this trade, scaling out of both contracts. I'll take one off at 57.50, depending on what the action looks like. And if we end up holding this area and building something that doesn't look like it's congruent with my bias, then I'll end up taking the other contract off as well. So that's what I'm looking at for the holding. I'll show you guys the weekly chart. Not the prettiest setup, actually. I'm not totally in love with the weekly chart, but I take these things very loosely. I think the market really gives us a lot of noise most times, so it's best to not overanalyze. You just want to trade momentum and really just trade your bread and butter setups and stay out of the way of the rest of the market noise. So anyways, guys, I hope you enjoyed this video. If you want to subscribe, I would love it. If you hit that little subscribe button, we can connect, share trading ideas. If you guys want to learn anything from me, just drop a comment down below and I'll make a video about it. I'm here to help you guys, and I hope you guys have an amazing weekend, and I'll see you guys on Monday. Take care.